Hey guys, welcome back. In today's video, we are talking about what AMC has brewing, the naked shorting problems, hedge funds over leveraged, and many more in this video. First, we take a look at this. First, the inverse cramer, then some unusual options alerts on tip ranks. Something's in the air on AMC, where what we are seeing with some of the unusual activity with options, AMC is involved. Now, recently, we've talked multiple things about AMC. We talked about all of these FUD news that are suddenly coming out for AMC. And then we're seeing how Jen Cramer has just gone on air to say to stay away from AMC. Now, we obviously know his track record, but not only that, we know the reasons for why media always targets AMC. And now we're finally seeing another factor, which is, of course, the unusual options activities for AMC. And so all of these is leading to one thing right now, which is obviously something is brewing, something is happening for AMC. Now, when you then take into consideration everything else that's been going on with hedge funds unwinding, with hedge funds being over leveraged, with hedge funds taking massive losses, with all of these liquidity that's been disappearing from the market, you understand why this is happening. And we've seen this happen multiple times in the past before. And then you obviously understand that what happens next is that the shorts lose control and then they have to hold AMC. But this time, obviously, we talked about with the regulations, with a different office. We talked about with how actually they don't have as much power as they did before. So that's why they are panicking. You can even see for the fundamentals of AMC, if we're moving on, let's touch $1 billion for April. If we have anywhere between 800 million to 1 billion for April, we may easily see the best Q2 ever for box office. We have so many awesome movies lined up in May and June, and we'll easily cross $3.4 billion. If April closes close to 1 billion, people are going crazy about these movies. If we push by seeing as many movies as we can in April, we will see the best Q2 in box office ever. Now, without doubt, what we talked about was AMC is already going to see increasingly good fundamentals this year. Last year, we were affected by the strike. This year, we had so many movies happening. We also have how AMC has improved their whole structure, the logistics of the company, allowing them to profit with the same amount of box office. But if we are able to get a good, even bigger box office, then obviously we are able to make even more money. Now, again, everyone understands why we need to make more money. The answer is obviously pretty obvious. But what would be even better is if people are eyeing up for AMC in Q3 and Q4, but then AMC already has done exceptionally well in Q2, that puts us in an even better position for the rest of the year. And so that's why if we are able to see a bigger box office for this quarter, what we're going to be looking at is how well AMC will be performing for the rest of the year, and how it will be projected. All these price targets that will be given for AMC will be extremely high when everything obviously happens. Now, let's take a look at this. So this is a decode of the tweet. Now, again, remember that decodes are speculative and for fun, but it obviously is interesting to take a look at this, especially with what we just talked about. So it's about Adam Aron's recent tweet where he talks about the deluge of big movie titles. Now, you can see that potentially when you decode it, you're looking at, in terms of talking about the movie industries, the AMC shorts, with the sellers having to obviously cover. Because when you look at what's obviously happening, a friendly reminder from the CEO that AMC and summer movie content for Q2 and Q3 of 2025 is overpowering. A good time to cover to avoid the flood about to submerge and destroy short positions. Again, decodes are speculative and for fun. Take it with a massive pinch of salt. It's obviously a 10 for a hat moment. But what we have to understand is what Adam Aron's talking about. And like I said, the reason why I want to bring this up, especially with what we just talked about how if we have a very good Q2 or the best ever Q2, how that will put us for the rest of the year. And so talking about this, knowing that Adam Aron's also talking about the movies, and knowing he's also talking about the fundamentals, obviously we can be looking at why shorts will want to cover. Now, furthermore, what we can see is this. With respect to naked shorting, that's a huge issue. Some sets I had thought they were going to take immediately when I left the commission, unfortunately did not get done. For example, I think it would be helpful to have a penalty if you short stock but do not follow through in borrowing it and delivering it because you don't want to pay for borrowing it. You sort of kick the can down the road. That sort of thing, if it's allowed to go on, is a problem. Now, this is something that it's obviously been talked about, but again, nothing ever gets done. Now, whilst we're reading about this, for me, I only took the end bit information in. The reason for this is because whilst they are saying that it's bad, no actions have ever been taken. However, they highlight the caveat of what this does. This sort of thing, if it's allowed to go on, is a problem. He followed that, or rather before that, he was saying you sort of kick the can down the road. Now, what they're saying is essentially, and everyone should know, but not everyone actually understand it, is that people think people get away with naked shorting. They think that because the stock has never gone up, the naked shorts have won. But you have to understand that these naked shorting are only kicking the can down the road. And so this isn't throwing the can in the trash, or this isn't just disappearing the can. This is just still prolonging the process. And if it goes on, it is a problem. So people are saying that because AMC is at $2.72, that the naked shorts have won. But the thing you have to understand is that the reason why AMC is at $2.72 is because the naked shorting that happened all the way back here, that happened back here, is still happening even right now. And they still exist till this very day. They're only kicking it down the road. They're stacking up a massive position that they can't exit. And so people have highlighted the problem, and this is just to further, this by Paul Atkins, obviously, this is just to further kind of illustrate what is actually happening and why it's worrying. And is why we talked about when all of these over leveraged positions get margin called and liquidated, the naked shorts will blow up along with it. And to talk about just how quick we're going to be seeing these potential margin calls, you can see here. 250 trillion is apparently the number that is too big for the mainstream financial media to keep ignoring. I've been warning about this for years. Shadow banking now accounts for $250 trillion, or 49% of the world's financial assets, according to the Financial Stability Board. Hedge funds manage 15 times as many assets combined as they did in 2008. The recent spikes in bond yields caused by hedge funds unwinding highly leveraged trades has some people worrying that this largely unregulated business could pose a 2008 style threat to the financial systems. So earlier we were obviously just talking about the margins, the margin calls, the liquidity, the squeezes. And this is just to show how close we are. Firstly, we are seeing that finally people have understood the problem. We're seeing how financial media is talking about this. Now, just because they're talking about this doesn't mean that it's only the beginning of a problem. They have been ignoring this for years, but right now it's become too big of a problem that they actually start to mention it. You also have to understand that hedge funds managed 15 times they did than in 2008. What's even more worrying about this is you have to understand hedge funds are extremely over leveraged, and hedge funds have put themselves in the positions where recently, as you can see, even if the market were to go, no matter if it went down or up, hedge funds were losing money. And so clearly the risk management and the whole position structures is wrong. And because of the recent unwinding, we saw obviously the spike in bond yield. You can see how the over leverage are starting to slowly crumble. So if you wanted any indications of, are we close to seeing the margin call? Well, this right here is it. You can also see how shorts are being faced with another problem as we're seeing GME spiking up. You can see this candle just gave hedge funds a nosebleed. Price ripped straight through the orange MA line like it owned it money. And now GME is tapping on 26.69 like it's the final boss key. Bear in mind that GME actually ended above this price. Volume 60k plus and climbing like it's powered by caffeine and vengeance. Next candle holds. We're looking at a full-blown gamma ignition sequence. And so this is just to see where GME is at. And you can see how strong these candles are, obviously indicating the bullish sentiment, indicating the bullish volume. Now, you guys can see something that is obviously happening. In the recent few days, as we're seeing how all of these collaterals are being wiped out, as we see how shorts are put in a very bad positions, AMC and GME has been going up. But more importantly, it's not just about AMC and GME going up, but it's about seeing AMC and G going up without being suppressed, without being faced with the pressure that we're normally faced with. And the reason for this is very clear and obvious. It's because shorts have put themselves in a position where they're running out of capital, where they're running out of liquidity, and therefore they aren't able to suppress AMC and GME like they did in the past. But yeah, guys, thanks for watching the video. I'll catch you guys next time.